Senior portfolio manager Tiffany Wade at Columbia Threadneedle. There's a lot to kind of put together in this morning's session. But again, technology continues to be the story in this market. Is that true for you?
Yes, that's absolutely true. We did see tech stocks take a bit of a breather, including semi stocks last week, but they're off to the races again this week, and that continues to lead the market higher.
Of course. For investors of all types, the outlook for monetary policy and rates is important. It was really interesting, Nouriel Roubini on Bloomberg Television earlier basically saying, nah, it's still tech. Just listen to this real quick.
People are obsessed with the Fed, whether it's 50 basis points higher, whether it's right now. What's the difference? The key story is tech boom, and that's going to be the most important first-order impact of anything else.
You know, Tiffany, I grew up in the Bloomberg newsroom school of, well, you've got to understand the rate environment because higher rates discount the present value of future cash flows, and future cash flows are one way that we measure the health and valuation of technology companies, big and small. Does the Fed really matter at all?
I think the Fed still matters a lot, and it matters a lot for tech stocks as well. It matters a lot for high-growth stocks. We did see a slightly more hawkish Fed meeting last week, Kevin Warsh's first Fed meeting. However, you know, quite a bit has changed since the data they were looking at last week, including the MOU between the U.S. and Iran. So I think we might see, you know, potentially some different news coming out of the next Fed meeting if oil prices continue to normalize.
And in the background, of course, for the Bloomberg Tech audience, you know, there are headlines coming from the vice president and his participation in the talks between the United States and Iran. We're very soon going to start talking about earnings again. And I just wondered, Tiffany, from Columbia Threadneedle's perspective, how important earnings momentum is going to be for a market where technology continues to dominate.
We're going to get a first read on that from Micron this Wednesday. I think that's going to be very important to see if the momentum from these stocks can continue. We're going to want to see continued revenue upside from a lot of the semiconductor stocks, and we're also probably going to want to see continued CapEx, positive CapEx comments from all of the hyperscalers that will help keep the spending party going for all of the associated infrastructure names related to AI build-out.
It's really hard in aggregate to kind of say where's the beginning, middle, and end here. You know, I think you'd note, right, Tiffany, that last week some of the chip stocks, the picks and shovels, took a bit of a breather. And off we are again today with the Philadelphia Semiconductor Index outperforming and a gauge that's up 90% year to date. How long can that carry on for?
I think we're going to see this continue for another couple of quarters. The outlook for these stocks related to AI infrastructure spending is tremendous. And the revenue and earnings estimates continue to be revised higher. And I think as long as that continues, you'll continue to see these stocks working. And some of the announcement we've seen, you know, with Micron and Anthropic, and then also around, you know, Microsoft and, you know, more data center spending in Texas continues to, you know, reinforce the story that this spending is going to continue for another couple of years and probably continue at a faster pace than it has been for the last 1 or 2 years. So I think we'll continue to see those positive earnings revisions that will continue to push the stocks higher.
We started the program today talking about SpaceX's inaugural bond sale, but I just use that as a case study that with CapEx, both in equity, the market's being flooded, right? Alphabet doing its offering, the use of corporate credit to fund what's going on. How closely are you tracking these companies going to market to get the capital they need to fund these big commitments?
We're certainly focused on the outcome of these bond sales because I think it's an indicator of the appetite for the market for the amount of CapEx spending that the companies are doing. It's also an indicator of future CapEx expectations. So as those bond sales continue to increase in size, it can, you know, it means that CapEx spending intentions continue to rise. So it's certainly something that we're watching to indicate the health of the CapEx spending cycle and also the intention of a lot of the large companies around additional spending for AI infrastructure.
Tiffany, real quick, what's the next thing you're watching for on your calendar?
I think it's probably earnings. Micron this Wednesday is certainly a big one that we'll be keeping an eye out for.